In today's market update, we're going to be discussing early troughs because it seems as if the 80-day cycle troughs that we were discussing in our previous market update might have come in just a few days early. Starting with the S&P 500 using SPX data, this is the analysis we've been tracking, and in my previous market update video, which I recorded over here on the 30th of September, I pointed out that the cycles have been behaving very well. The market is etching out perfect Hurst cycles. Here is our 40-week cycle trough that we believe occurred on the 5th of August, and since then we have seen a very regular sequence of cycle actions, including this 40-day cycle trough over here in early September. In this market update that I recorded on the 30th of September, I pointed out that price was expected to cross below this 20-day cycle FLD, which is the purple line that you see here, on its way down into the 80-day cycle trough. Here is the nest of lows for that 80-day cycle trough. What in fact happened is that the very next day price came down to the 20-day cycle FLD, and it eventually did manage to struggle below that FLD. Let's zoom in, because it is important to bear in mind that we are considering the median price crossing the FLD as opposed to simply the low price of the bar, and that is because the FLD is itself based upon the median price. At the zoom scale, we can see that price did in fact cross below the 20-day FLD, or I should say median price did cross below the 20-day FLD on the 2nd of October. It then came back to the FLD where it failed to get back above the FLD, but it finally did cross above the FLD over here. Here you can see our nest of lows, which was centered on about the end of last week, or perhaps the weekend that has just occurred. And if you do not understand how it is possible that a cycle trough could occur over the weekend, I would encourage you to download the 10 Core Concepts document that I will provide a link to in the description below this video. Now, when price crosses below an FLD as it did over here, and that was our expected F category interaction, we of course generate a target to the downside. That target was at about this level over here. Price failed to reach that level. Does that mean that is an invalid target? No, it simply tells us that there is still bullishness in this market, which is not really a surprise because the market has been bullish since that 40-week cycle trough on the 5th of August. If this was our F category interaction, which we were expecting, we would then expect a G category interaction where price would come up and find resistance at the level of the FLD. That appeared to happen over the previous weekend where price came back up again, and as I pointed out when we were looking at median price, actually failed to get above the FLD. On the Monday of last week, it again found resistance at the level of the FLD, came down, and on Tuesday formed a lower price, then reversed upwards again. On Wednesday, price crossed above the FLD, making it very likely that this here is the 80-day cycle trough that we have been expecting. It simply occurred a few days early. Is that unexpected? Not at all. When you have a bullish market, you must remember that troughs tend to occur early. And so what we are seeing here is very likely a complete 80-day cycle which has ended in a particularly bullish fashion, confirming for us the fact that this market is still in the grips of a strong bull. Taking a look at the composite model line, you can see that the composite model line suggests that price is going to rise up to a 40-day cycle peak and then drop down to a 40-day cycle trough, which is now expected, of course, in about the middle of November. As a matter of interest, the next 80-day cycle should be less bullish than the previous one, and so we should begin to see a waning of the bull. Taking a look at the Nasdaq, there is not very much to add. We again have our 40-week cycle trough over here on the 5th of August. Here is our nest of lows for the 80-day cycle trough. This nest of lows was generally a little bit earlier and implies that the trough was expected early last week as opposed to the end of the week. I am displaying here the 40-day cycle FLD because an interesting thing happened at the beginning of last week, which is the price found support at the level of the 40-day cycle FLD. Usually, as price comes down to the 80-day cycle trough, we would expect price to cross down below the FLD. But as I have had occasion to mention many times in these videos, there are times when the market is bullish that an FLD will provide support, even at a time when price is expected to drop down in a neutral market. The important condition is that it would be a neutral market in which we would expect the price cross. Again, this is evidence that the US markets are still bullish. And this composite model line confirms that for us. But again, the next 80-day cycle is expected to be less bullish than the previous one, and so we do need to be on the lookout for this kind of downward movement, which is likely to be a little stronger than it has been in the previous 80-day cycle. The Australian markets have also been behaving extremely well. We have the same 40-week cycle trough. It occurred a day later in the Australian markets on the 6th of August, and here is our 40-day cycle trough in early September. Now, in our previous market update, which of course I recorded over here on the 30th of September, I was pointing out again that we would expect price to cross down below the 20-day cycle FLD on its way to the 80-day cycle trough. Here is the nest of lows for the 80-day cycle trough. Price did cross down below the 20-day FLD, but in fact median price only actually succeeded in crossing over during this weekend over here, at which time the FLD, as I think you can see, was a little bit higher, generating a much reduced target. But throughout last week, price moved back up towards the FLD. It appeared to encounter some form of resistance at the end of last week, but as you can see from today's price action, and I believe that the markets in Australia are already closed, and so we are seeing a completed bar here for the Australian market. Price has crossed above the 20-day FLD, making it very likely that this over here is the expected 80-day cycle trough. Displaying the composite model line, you can see that this particular combination of cycles results in a slightly more bullish bounce out of this 80-day cycle trough. But again, this next 80-day cycle is of course expected to be less bullish than the previous one, and so we need to be on the lookout for the move down into this 40-day cycle trough, which is going to be the next focus of our attention, occurring in about the middle of November. While we're looking at stock markets, we have been looking at the Nifty 50 in recent market updates, and the Nifty 50 gave us a little more dramatic action last week or 2 weeks ago. This is where we recorded the previous market update video, and as you can see on Wednesday of that week, price did in fact cross down below the 20-day FLD, which we were expecting in the F category interaction, on its way down into this 80-day cycle nest of lows. Now the nest of lows here is very straggly, as you can see. That is sometimes a sign of the fact that the analysis is less clear. It is certainly something that you do often see when analyzing the Nifty 50, largely because of the fact that these bars represent only several hours. I think the trading day isn't even a full 9 hours, and you will notice that the data is slightly strange. We get quite a lot of these gaps, and we get a good deal of discontinuity in the data. There is not very much that we can do about that, and so we need to accept the fact that the analysis needs to be considered fairly carefully, and we will often face straggly or very messy nests of lows. In these circumstances, I always find it useful to count the number of bars. Bear in mind that the average length of an 80-day cycle, discovered by Hurst 50 years ago, or 55 years ago now, was 68 days. And so the average length of an 80-day cycle would have brought us to a trough on the 12th of October. Again, it seems very likely that this trough, only 5 days earlier on the 7th of October, is in fact an early manifestation of that 80-day cycle. Early troughs occur, as I have mentioned, in a bullish market. And so this market is still showing signs of being bullish, despite this dramatic drop down 2 weeks ago. You will notice that the analysis at the moment is suggesting that what we have here is only a 20-day cycle trough, and that the 80-day cycle trough still lies ahead of us. That is certainly a danger that we need to be aware of. How will we know whether the 80-day cycle trough has formed or whether it still lies ahead? The answer, of course, will lie in the way in which price interacts with this 20-day cycle FLD. If price finds resistance at the level of the FLD, then we will still be looking at an 80-day cycle trough lying ahead of us. However, by the principle of commonality that tells us that markets around the world move with a great deal in common and often experience cycle troughs at exactly the same time, notice this 40-week cycle trough in the Nifty 50 also formed on the 5th of August, it is very likely that the 80-day cycle trough has also formed in the Nifty 50, in which case we would expect price to cross up above the 20-day cycle FLD, generate a target to the upside, and keep moving up in the next 80-day cycle. Gold has been perhaps the best behaved markets of the lot. It has again been etching out perfect cycle shapes. Here is the 80-day cycle trough that we have been speaking about that formed at the beginning of September. We were expecting price to drop down into a 40-day cycle nest of lows, and price did cross down below the 20-day FLD. It only finally managed to get median price below that FLD at this point over here, generating again a rather reduced target, which was very accurately met at exactly the time that the 40-day cycle trough was expected. This can be phased with confidence as the 40-day cycle trough, particularly as price has now crossed up above the 20-day cycle FLD, although I should point out I am recording this market before the US markets open, and so this bar is not yet complete. And that is why the software has not yet positioned the diamonds below this trough, because it is still possible that the market will surprise us. But given its recent good behavior, we will assume that the 40-day cycle trough has formed. Zooming out a little to see what we expect next, and applying the composite model line, you can see we are expecting a move up into the first 20-day cycle peak of the next 40-day cycle, and then we are going to see a slightly muted 40-day cycle play out for the move down into this cycle trough over here, also expected in about the middle of November, which is expected to be a 20-week cycle trough. You can see this green line, the whisker for the 20-week cycle. Notice, however, the dramatic drop in bullishness from this first 40-day cycle to this next 40-day cycle. That is, of course, because of the fact that we have the 20-week cycle that must be weighing down on price and start having an influence soon to reduce the bullish pressure of the longer cycles pushing upwards. Finally, Bitcoin has also been behaving perfectly. Here we have the 80-day cycle trough in early September. That cycle trough could potentially be a 20-week cycle trough, but we're not going to discuss the slightly longer term picture. For now, I just want to focus on what has been happening in the near term, and that is that, of course, a 40-day cycle trough has formed, as we were expecting when I recorded the previous market update, which was on this day over here, this strong downward day on the 30th of September. In fact, price came all the way down to the 20-day cycle FLD that I mentioned in that market update, and on Tuesday it succeeded in crossing below it. That generated a target to the downside that was reached as it formed its 40-day cycle trough on Thursday of last week. It is now bouncing out of the 40-day cycle trough and will very soon, by the looks of it, reach the target generated as a result of crossing above the 20-day cycle FLD. The composite model line gives us a good idea of what to expect out of the next 40-day cycle, which is a potentially higher peak, in other words, higher than the previous 40-day cycle peak, but then a move down into this 20-week cycle trough expected a little bit later, perhaps, than the other markets that we have been looking at, but only by a few days. And so the middle of November is likely to be our focus for the formation of the next cycle trough in Bitcoin. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.